All right, good morning, good afternoon. Hope you guys are having a good start to your weekend, good end to your weekend, whenever you're watching this. Welcome back to another market analysis video. I'm Taylor Moe with True Trade LLC, and this is a market recap for the last week of April 2020. This is the SPY, the S&P 500 ETF that we're looking at. And so here's the end of the week. Last week we talked about, if I move over to a daily, right, we talked about that we had this breakdown, we had a potential breakdown here, but when we saw this gap up and then actually got follow through, finishing the week above the 50% retrace and really just holding inside this range, and we looked at some of the other markets like the IWM and the DJT, and they were showing relative strength. They were actually looking to break up out of this bull flag pattern. And that's exactly what happened. And, I said I was targeting that kind of 290, let's see, I believe I had this chart up that we were looking at last week. And we said we were looking at this golden zone, as well as this kind of red zone above on an overshoot. And so that's exactly what we got, was a shoot up to this golden zone. They didn't make it easy. They had a big full-blown reversal in here. And one thing I want to point out about that reversal, if you have your pivots marked, right, we have all these pivot zones, and this one's taken from this pivot here, and then it comes up and tests it again here. Notice the low on this day I have marked as 285.54. And the close on this day here was 285.73, so just about 20 cents above that level. And that's not an accident, guys. You have to be paying attention to where the market closes based on these pivot zones. And so this was not bearish. And we knew that coming in to the next day. We did not swing puts. We did not get short the market. We were kind of playing day by day in here, and this day right here is where we actually started to get in short, and I will kind of explain why that happened. So the first sign was that you had a close above the 61.8, and immediately the next day you're gapping back below it. And not only are you gapping back below that, you're gapping below the breakdown candle from this day. So I have that marked as a straight line. Whenever you have a breakout of a certain area and it gets recaptured on a gap down, you want to pay close attention to that. And not only that, but if you went over to the ES, the futures contract, in the middle of the night, we actually came up. There we go. And so this zone here is the key supply zone, and that's taken from, if you go over to a 4-hour, right, this is where all the supply was built up, right, in this area here, right, before the big drop. And this was a key area where the market based for 8 hours here, right. We had these two basing candles, and then we had a big drop. And that's kind of what got us started on this massive move down. And there's also a gap, right? There's a gap right here that was left unfilled. And markets like to come back and test these gaps. And so what I saw on like a shorter time frame in the middle of the night was that we came up to this gap, we failed pretty quickly, and we immediately started trading away. And here's the open of the next session. And so that, mixed with the SPY levels, kind of false breaking and getting back under resistance, led me to believe that we could be getting a short-term top, and that's exactly what we got. We did some swings into this day, kept shorting into this day on certain names, and now we have a daily chart false break, right? We have this pivot that was made, we have this pivot that was made, this pivot that was, so 3 pivots in the same zone. This, and even a close touch here. This is clearly a really important area to the market. And now we have a false break and a daily close. back below this zone. So naturally, what's most likely to happen is that the market comes down and tests the next zone, which you can see here. You have pivots here, pivot here, pivot here, gets above, support, support, support. And so this is really our next key zone. You do have the 50% fib in the middle of here. And so we're going to kind of go through what this next week can look like, what I think it's going to look like, and how I might position according to what I am seeing. So if we go down to a 30-minute chart, and then I'm going to switch over to a kind of a blueprint that I've made for this week. And so here's the blueprint. We have an unfilled gap. We know that the ES filled its gap, but up top there we still have a gap on SPY. We have to know that that's there. Because why? Because market likes to fill gaps. It's attracted to gaps. And so we have to note that that gap wasn't filled, and it can come back up, right? We're still in this channel here. There's no reason that it can't bounce off the bottom of the channel and actually go and fill that gap. So we have to keep that in mind, first of all. That is totally possible. On the other hand, I'm leaning towards a different stance, but I still keep that in the back of my mind. So my stance, as you can see here, is sell the rip at this zone. Why? Because that's our false breakout area, right? We tested, couldn't quite get through, got through, and boom, we're right back down. So this should now become resistance. Obviously, a gap back above this zone takes that completely off the table. If you get a gap above this zone and you start holding here for an hour or two, guess what? You're probably going to go higher, right? You're probably going to go for this gap and then the gap above, and you stay inside of this channel. Nothing's wrong yet. On the other hand, we'll look at some other indices and see why there actually could be some trouble ahead short term, and we probably should be looking to sell the rip here so long as we do not gap over the zone. This is going to be the key area. And then here's our range, right? Here's our prior range. And so there's these middle levels inside the range that coincide with this trend line. And we can expect, if we gap sideways, right, if we open right here, that we would get some support and maybe break this trend and maybe visit this zone up here before kind of doing this sort of thing and maybe coming down, and boom, then you test here, back test this trend line, and this is the buy the dip spot. Why is this the buy the dip spot? Because as we saw from a daily chart perspective, it was a really important zone, right? This is your pivot. This is the low that if it gets taken out, this market could get pretty ugly. And I'm not talking this kind of ugly. No, definitely not. Anyone that thinks that the market's going to go like this, probably not got their head screwed on straight. I'm not saying that it's not possible. Anything's possible. I don't want to tell you that it can't happen, but the odds of it are incredibly slim. I just don't think it's going to happen. At least not as quick, right? I'm not saying it can't happen, but it's not going to be as quick. I'm definitely not in the new lows camp, but you have to be open to it. If I see things change, I'm quick to change. I will tell you that there's new lows coming if I think there are, but anyone looking that far ahead and saying that is really just full of shit. I mean, they don't know what they're talking about. No one knows that far out in this kind of a market. So you really have to play it day by day, week by week, and just see what the market's telling you. So, and then right down here we have this incredibly important pivot at 261, and this is my zone. If we happen to get down to, I will be building pretty sizable long positions in certain names as well as just the broad market for the next move up. And if we look at a weekly chart, we'll go back to the weekly and explain why. So you have this kind of hammer candle, the inverted hammer. And so that's rejecting this key area, right? We talked about this key area. This is our sell the rip area. But you have to keep in mind, this weekly chart has basically gone sideways for 3 weeks, right? If you just look at the closes, we basically closed about sideways for 3 weeks straight here. And maybe if here, I'll let you, that's a better chart for this. So yeah, we basically closed sideways under this resistance for 3 weeks. We do have a rejection off the 61.8. So as the daily charts are suggesting, it's very possible that we come down and test where the weekly supports here. There's also a weekly close right at the 50%, so that can also be support. So weekly chart is kind of confirming the same things that we're already seeing. Now, why is this 250 area a huge buy for me? And that's because, one, you have this large reversal candle. If you don't think this is a massive reversal, you need to go look at some other charts for market drops. This is a reversal. Guess what? This trend line? This is the 2009 trend line. Right? Let that sink in that we broke the 2009 trend line. We closed here. Look at that, open right on it, open right above it. Boom. So not only is this area a huge buy because of this reversal candle close, but you also have a pullback that happened here where the buyers won. The buyers pushed us up through a 2009 trend line and saved the market from death, right? From panic, from sub 200 price levels. And so on any move down to this area where these buyers were positioned, where the close of the reversal was, where the bottom of this breakup candle is, right? This area, I mean, is just a straight up buy long term. There's no other way around it. Now, if we see some sort of selling come off this top that makes me change my mind, maybe this is only a short-term buy, and I'll let you guys know, but that's my plan for now. Key supports on the weekly, right, are that buy the dip area, and then really this area right down here from about 255 down to like 245. That is really big long-term support. So let's go ahead and look at some of the indices and see what they could be telling us about this coming week. The IWM, the small caps, these are a big market leading indicator. These were in this little pennant here, and they right here they kind of broke up. This was the end of the week, and I said, hey, look at this. It's got a little pennant going on right here, and there's a break up, right? It's a little difficult to see, but if you drew a line like right here, it's rejecting, and there's a little pop. And I said, watch for these to go higher next week. They went a little higher than I thought they would. I thought they would actually peak out around this 130 spot. They actually popped above their wedge trend line. And this is something you guys can pay attention to. If you draw these trend lines, you'll see you don't necessarily just want to trade directly off a trend line. But what you can see is that you draw a trend line, it maybe pops above, and you'll see this a lot, is that there's little fake outs. There's little jabs, right? They'll pop above and they'll come back below. Typically, when you have a jab of a trend line like that, it's going to see a move in the opposite direction back inside the trend line pretty quickly, typically. Sometimes the trend line ends up not really being important anymore, and it kind of just goes back and forth, and take it off your chart. But you can see this one acted well. It opened right above, held it as support, opened back below, used it as resistance, and boom, then you get a drop below that next pivot zone. And so what I've done is I've marked these blue lines on all the indices that we're going to look at. And these are essentially the same false breakout area as the SPY. So you can see the IWM has not recaptured its pivot, so it hasn't had a false breakout yet. So one thing to watch, does the IWM gap below this level, this pivot, that's very bearish, right? That's short-term bearish. Then we can come down to this next level. And does it hold up? Does it hold up and somehow make its way back above this zone? But I mean, this has got the same thing going on as the SPY. You can also use this zone, right? And we're below this trend line. We're below this trend line, guys. So if we open sideways, do we pop up here back to this zone and then eventually roll over and come down and test this next zone? That's what I'm seeing right now, guys. I mean, this is nothing but a down move followed by a bear flag. Maybe you get some sort of test of this zone, or maybe you just gap straight down to here and then see buying. But this is kind of the same buy the dip area as the SPY would be, right? It's the same kind of bottom of the breakout area that we had. So naturally, that's going to be your first area of strong support where the market could look to head back up. But overall, I mean, this is weak, guys, down 4%. And again, the XLF, a ridiculously weak index leading to the downside, did not even make a new high. 2366 on this high, 2366 on this high. Is that an accident? No, definitely not. You see stuff like that over and over and over again. It's never an accident. You get a reversal, no new high. What have you done now? You've gone from making highs of a trajectory like this, and now you're making highs of a trajectory that's flat. That's a double top, and I'm telling you guys, if this blue line is broken, see you later, financials. We will be down here in no time. Do I still think this is a buy? This is the same area as 245 spot. Yes, I do. And this is something that we have to keep watching as this market develops and as it gives a more clear picture. Right now, yes, the SPY looks like a buy at that 245, 250. Does the XLF really look like a buy? You know, not really. It's looking pretty damn weak. And so this is one definitely to watch, because you need the financials, right? The market can't do that well if the financials are just lagging. And that's what we've kind of seen these past couple weeks is the market, yeah, it's gone up, but it's not really getting too far. Why? Because the financials are really weak. So definitely one to watch, right? This obviously didn't have a false breakout because it didn't even break out. We are kind of breaking below these trends, and so that's something really interesting to watch. This trend line was kind of already broken down here. It's why I removed it, but we had a back test of it, right? You see that back test. It's not perfect. We popped above it for one day, back below, back below. So definitely a lagger, definitely showing weakness, and I do not like that. That's a bearish sign, okay? Excuse me. DJT. Transports, these are my favorite market leading indicator. Why? Because they seem to almost do what the rest of the markets are going to do a day ahead of time. I don't know why, but that's just what they seem to do. And so this one is super interesting. It's a really clean bear flag pattern, super clean. You can see I said we wanted to watch this, and we pointed out that there was actually a little mini like bear or bull flag in here, and this was another reason why the markets could see a pop this week. And look at that. I mean, this one was really brilliant. Right to the top of the trend line, went to test this zone, and comes back right down. So another one that's really key to watch. This is the zone right here on the DJT that we cannot be below. Not only would it be breaking this wedge, but would be breaking, right, this really important zone. Look at how much it fought in here. Really clean pivots over here. So we don't want to see the DJT below this zone unless you're bearish, of course. If you're bearish, that's great for you. If we can get below and close below this zone, we did it here for a couple days. That was kind of our bear trap. When we got above, that turned us bullish. That made this a bull flag. So now we're here again. We're here again, and this time, I'm not so sure it's going to hold. I'm not going to tell you that it's going to break. I'm not going to tell you to take bearish positions. Do your own research, but this does not look great to me. Just watch this zone. Watch this zone. Again, there's nothing that says we can't have a gap up on Monday and actually go up for another high before a drop. There's nothing that says that can't happen. So watch if there's a gap up. SPY's still in that channel, right? We can still go to the top of the channel again, fill the gap and come down. So I'm playing it very, very cautiously, right? If you're going to enter swings, make sure you're entering at a good spot. Don't enter here, right? You need to have good risk management, good entries. Don't just take what I'm saying and enter some dumb trade, right? You have to, right? You have to do things well. And if you guys want to see what I'm trading live every day, and you want to talk with me, ask me questions, there's a Discord link in that bio. I know these are only so helpful, these videos, but if you want to actually see what I'm doing throughout the week, how I change my plan throughout the week, because sometimes what I say in these videos, you know, every now and again, something will change. There will be a gap. There will be some change in market action, some change in news. And those are things that you have to adapt to. And so that's what you'll get by joining the Discord. You'll have me and my partner every single day there with you, live, voice chat, signals, education, all that. So feel free to try us out for a week if that's interesting to you. Okay. Lastly, let's look at tech, which I think is one of the really big tells. The SMH, the semiconductors, complete breakdown. Complete breakdown, pickup in volume, reversal candle. I'm not going to say, right, I can't say that this is going to fall out of bed, but this looks pretty bad for tech. And I'll show you the cues too, and why I think they're actually looking pretty rough too. But essentially, okay, we have this pattern, and what I was interested in is right here, you see the market kind of bases before pushing to a new high. And so what I want to see, if a market's going to stay bullish, this is kind of the breakout area, these two candles here where we based, we found support right here, and then we pushed up, up, up to a new high. Can that support hold? Right here. Can that support hold? And let's go look. There's the support. You get a measly 50-cent bounce. And down she goes, sideways the rest of the day. So is that telling you bullish or bearish? That's telling you that this was not the final destination. This index is looking really, really weak. Semiconductors, AMD, NVIDIA, you know the deal. So again, they're headed down here. Where does this line up with the SPY by the dip spot? So this is going to be the same thing here. You have these lows, and then yeah, you probably get a little bounce off these and go from there, right? Go from there, see how the buying looks. Is that going to be a low that takes us to a new high? I don't think so. I don't think so. Again, I think we need to come lower, but that's my opinion for now. That can change. But that's what I'm seeing. This was not the final destination. Next up is the next pivot. Another market that looks like it can go lower. And the cues, you've got the same deal, right? This is actually what we call a pivot candle. Why is it a pivot candle? Because if you go down to a smaller chart, when you see a long tail like this on a candle followed by a close near the lows, that's signifying that you have a lower high. So look, we go down to a 30-minute. You get a few candles up here, you get a downturn, And then that pivot candle is signifying that you go up and you now have a lower high that closed on the lows. That's weak. That's signifying change of trend, right? Change of trend. And so what did you have here? You had a down day. And then on the daily chart, you can actually see it opens here. You go up and make a tail and you close near the lows. And what does the next day do? Big red day. What do you think the next day or 2 or 3 is going to look like on the Qs? I'll tell you exactly what it's going to look like. It's going to be down here. Okay. 90% chance, right? If there's a gap up, okay, I'm wrong, right? If there's a big, it has to be pretty sizable too. But from what I'm seeing, that is not going to happen. The Qs have been rejecting this weekly trend right here. And look at that daily. They're on the verge of just cracking right down to this pivot, right? Maybe even the lower one. So you have another market that looks, it's not quite there yet, but it has the pivot. That's our confirmation that a downtrend is starting. Do not be surprised to see the Qs down here and the rest of the markets following suit. Facebook reversal. This is a reversal. Why? You have a resistance here, a breakdown. You have a gap up, close above it, and you're right back below. That's a reversal pattern, right? Don't be surprised to see Facebook down here. Apple. That's a reversal. Why? Because it's a long, long wick. It's not one of these, right? It's not one of these. It's a long, long wick that comes back and closes near the lows. It's a potential reversal. Microsoft. Pivot candle. What did we just talk about? What is this? A pivot candle. What happened the next day? You get my point, right? This is a pivot candle. This is a double top. I'd be surprised. I'd be quite surprised, right? I'm ready for it. I'm not a biased trader. I trade both sides, but I'd be surprised to not see Microsoft down testing these lows early next week. Possibly even this support zone that kind of led this rally. That's really your buy the dip spot on Microsoft, is right down at these lows. So you can see, guys, stuff's looking a little tough, right? You got Tesla. Wow. Wow, if you guys played Tesla, this was a dang fun week on Tesla. You got Tesla, 2 big high volume reversal candles. What is that telling you? It's telling me it wants to come down, test this zone, test this trend. Maybe it doesn't happen right away. Maybe we hold these lows for a bit. Sure. Right? Maybe it follows the rest of the market and kind of bounces up and then rolls over one more time. But you've got big names looking weak, guys. So that's what it is, guys. You get back above this zone here, bets off the table. But if you were gapping sideways, guys, I'd look to get short in this zone. Look to take some profits down here. And yeah, see if you can maybe squeeze out some more down to this zone. I'm not positive we'll get down there. I'm not going to look that far ahead. But it's good that you guys have these marked and know the areas to be looking for. Okay, so go ahead and like and sub if you haven't. And again, being small, if you guys can share this with anybody that you think would like this analysis, would find it useful, that'd be super awesome. Because it's just hard to get subs at this point, and I really just want to spread the knowledge, spread the love. All right, so you guys have a good rest of your weekend and good luck next week. It should be a fun one with earnings continuing. Yeah, have a good one. Peace, guys.